Welcome back. And in our top business story, business leaders in the UAE and across the region gathered at the 6th Arabian Business Forum in Dubai today to discuss potential future growth. Among the eminent speakers at the event was Fahad Al Rashid, the CEO of the King Abdullah Economic City, a privatised development in the Kingdom of Saudi Arabia. Addressing a room full of senior corporate leaders spanning various sectors, he said the region holds great potential for many companies to grow, as long as entities look at the opportunities. He stated that companies in the US and Europe have $1.3 trillion in cash to invest and are looking for market growth, especially now during the post-recession environment. He said Saudi Arabia, for instance, is one suitable area for investment, as it's currently witnessing growth. It has massive developments in the pipeline with the aim to diversify its economy through various efforts such as religious tourism.
Some of them are focused on China and India, and to a relative extent Brazil, but we believe the Gulf is a big market. And King Abdullah Economic City has been able to attract who's who in the industry, including Greif, Mars, Pfizer, Sanofi Aventis, etc. So this is just an example of what the region can do to attract global companies, even in this tough economic climate. But the other is energy-intensive industries like steel, metals, aluminum, but now even more plastics. We're focused on logistics because of the location on the Red Sea and the size of the economy. We're focused on housing because of the market demand. So I think for Saudi Arabia and King Abdullah Economic City in particular, we're really focused on the things that we think we can drive long-term and can have sustainability beyond 3 years.
Meanwhile, Air Arabia's CEO, Adel Ali, shared some important tips for a successful venture. He said the phenomenal growth of the low-cost carrier, which is now flying to 74 destinations, is partly due to its location. However, there's a lot more that went into its success.
Business have to go back to basic. Back to basic is, one, you should manage your business yourself. So you should know what your business you are in. Two, I think people sometimes tend to get involved in too many businesses. They call it diversity, but diversity has to be making some business sense. And it's not necessary that everything makes money on a spreadsheet, makes money on reality. And the third item is, don't get on a business that you don't know. And again, a lot of that unfortunately happen because there is always a price for learning. Sometimes those prices of learning are too expensive.
Horizon Terminals, a subsidiary fully owned by Emirates National Oil Company, officially started construction on its $142 million bulk liquid petroleum terminal in the Jebel Ali Free Zone on Monday. The terminal has a storage capacity of 141,000 cubic metres. It boasts a 58-kilometre pipeline that connects to Dubai International Airport for jet fuel and will also have a branch-off operation to the Al Maktoum International Airport. Operations are set to start in the fourth quarter of 2013. Saeed Abdullah Khoury, the chief executive officer of ENOC, was quoted in WAM as saying that the tremendous growth in the aviation and airline industry needs to be sustained with a timely and reliable supply of jet fuel, which is the primary goal of the new terminal. Dubai International Airport is on course to becoming the world's third busiest airport by 2020, set to welcome 98 million passengers. Now let's take a look at the stock indices across the GCC.